Okay, let's have a look at chapter 5, which is technical analysis or market price behavior. Last week, we went through chapter 4, which is related to fundamental analysis. Okay, fundamental analysis last week, fundamental. Okay, we are talking about analyzing economy, industry, and company. Yeah, and company. Alright, so these three, it depends on the analysis that you want, either bottom up or top down. Okay, but usually, for fundamental, we are more on analyzing. That means performance, yeah. But for chapter 5, technical analysis, we are more on studying on graph. Okay, we are studying more on graph. Let's see, what does technical analysis can deliver to us, yeah. Learning outcome, explain the concept of technical analysis. That means you get to know the basic first. And then the second one, to understand the market price trend. You see here, there is a keyword, market price trend. Market price is a price of shares that we sell in the market. And able to predict. So based on the trend, you will be able to make prediction. And also you need to make decision based on market price movement. The decision is made either you need to buy or you need to sell. So that is a learning outcome for this chapter. Okay, what is the technical analysis? Okay, technical analysis is the study if the action of the market or market behavior. Okay, this one through the prices. We're talking about analyzing the stock market prices and volume of shares transacted. Okay, so but you have to bear in mind, later on, later chapter, later this sub-chapter, we want to see, what are the types of market behavior later on. The premise of the technical analysis that share price moves in a cycle and it will repeat itself as the demand and supply fluctuates. That means, the price can be going up, going down, going up, going down, going up, going down, going up, going down, and it which is move in the cycle. That means what goes up must come down. What goes down must comes up. In Malay we call it as a harga naik turun, naik turun, naik turun. Why? Why this thing happen? Because if you learn microeconomic, there is a demand and supply. Whereby if you learn microeconomic, the equilibrium between demand and this is the supply and then this is the demand. Demand can shift to the right or shift to the left, or supply can shift to the right and shift to the left. So that's why price can be going up, going down, going up, going down. Because of the equilibrium changes every time. Once trend is identified, investor can make decision accordingly until the trend is reversed. Reverse means that it will go another way. Okay, please bear in mind, trends in technical analysis will assist you not only this chapter but also to assist in a later chapter. Okay, there are two trends in technical analysis. The first one is bullish. Okay, all right. Why bullish? Bullish bullish was taken from the word bull. In Malay we call it as a lembu jantan. Bull, whereby the bull is more on aggressive. Okay, aggressive. So that's why, as you can see here, this trend, even though there is a decrease, increase, and so on, the general trend says that is more on increasing trend, isn't it? Okay, it's more on increasing. So, the general trend, the primary look, as you can see here, the trend is increasing from September until November next year. So that's why, the trend of increasing, we call it as a bullish, which is upward move, or market price increases. You see here, these are the trend. All right. The next one is bearish market. Bearish market happens because of the general look. You can see there is a downward trend. Yeah, the bearish words came from the word bear. Yeah, bear. Beruang lah Okay. So what does bear do? Bear is more on passive. Yeah, passive means that they always sleeping, lazy, and so on. So that's why they are more on downward mood. Okay, downward mode or market price decreases. Okay, that is a trends in technical analysis. All right, so there are two trends earlier. We're talking about bullish. Bullish is that market price goes up. Bearish means that market price goes down. So that's why market price increase. For bullish, market price is decrease. Okay, the prediction Alright, why prediction is a key? Because prediction will based on the nature of the market price behavior. What goes up must comes down, what goes down must comes up. Since there is increases, the prediction will be going down. As simple as that. Sometimes it can be going up, but later on, it must be have some day that will be going down. But if bearish indicates that the market price decrease, later on you might find out that the prediction it will be increased. The shares will be going up. All right. So if market price decrease, that means the price will be cheaper. If market price increase, that means it will become more expensive. If more expensive, that means investor can sell the shares or do not buy. Do not buy because it is expensive. But for this one, bearish, if the price is cheaper, that means it is opportunity for investor to buy the share, or if they have shares, do not sell. Because they don't want lose, they want some lose. So that's why the decision is based on the principle of buying with the low price and sell with the high price. Okay, I give you a technical example, numerical example of this one. Okay, let's have a look at this one together. Have a look at Bursa Malaysia. Bursa Malaysia. Alright. I'm not in the Google Meet right now. Okay, I'm outside the Google Meet. So, if you want to answer that, if you want to answer my question, you can open the mic and answer that. Okay, let's have a look at the main markets. Okay. Alright. Let's say A Asia. Have a look at this A Asia. Astral Asia. This is Astral Asia. Okay, I think I need to select by sector. That might be easy for you. Consumer product. Let's say one of them is food and beverages. I believe most of you are familiar with this one, Dash Lady, because Dash Lady is dairy milk. Okay, let's have a look at one here. Okay, if you see this one, is it bullish or bearish? Let me take a guess. Is it bullish or bearish, this one? If you look at the general trend.
Bearish.
Well, is it?
Bearish.
Bearish, okay. How about the other? Bearish, right? Okay, as you can see, the price, let's say from the peak one, 48 ringgit per share, going down until one point become 34 ringgit. Okay, let me done some sorry, not whiteboard. So okay, as you can see, this one, 48 ringgit, and then later on May 20, May 2020, and then later on, this March, going down to 34 ringgit. So as you can see here, Dutch Lady share price has having some losses. It's about like 48 until 34 is like 14 ringgit. Yes, the share price dropped massively. But since there is a decrease, there is an opportunity for investor to buy because they can buy this at 34 ringgit. We hope that the price will be going up once again. So that is a prediction. So what goes down will be going up again. So that is a prediction on that is a tips on how to buy the shares. I look at the price that goes down. Yeah, if the price is going down, that means it's opportunity for me to buy. Yeah, and then I will sell later when the price is going up again. Okay, let's have a look at another example. Yeah, let's say FNN. Okay. I cannot see the trend. It's more on flat trend. How about power root? Let's say. Okay, this one also bearish, bearish this one because you see here going down from 2 ringgit 65 cent until 1.7. So that means around like 80 cents on to 1 ringgit or something like that. Okay, let's have a look at another example of financial services. CIMB, let's say. It's not gonna help this one. How about Bank Islam? Okay, how about this one, Bank Islam? General trend. Do you see the bearish or bullish? This one. The general from naked eye, your naked eye. Is it bullish or bearish? Anyone?
Bullish.
Bullish. Okay. How about the others? Any other answer? Okay. As you can see, yeah, this one is more on bullish. As you can see the trend because of let's say this one from 2 ringgit 82 cent on on April. I guess it's April 2020 goes up to 4 ringgit 46 cent. So as you can see here, 2.8 into 4.46. Yeah, whoever bought that share that time, 2.8, 2 ringgit 80 cent, and then when it was reached at 4 ringgit 46, it's like that they got a profit or gain of let's say 1 ringgit 60 cent, ringgit 60 cent. So the gap here, yeah, which is opportunity for them to sell at 4 ringgit 46 cent. So that's why they make money because they bought at this price and they sell at this price. Okay, later on, yeah, the prediction, yeah, the price probably will be the decline someday. Yeah. Okay. So if the price will be declined, there will be an opportunity, yeah, for investor to buy once again. Okay. Let's have a look at final example. Let's say there is no specific rule of thumb we can say about on predicting, yeah. Okay, as long as you can see the trend, yeah, that you can it can help. Okay, I think it's IT communication and media. Okay, let's have a look at DG, yeah. G, okay. Yeah, DG is more on declining trend. So somehow we can have an opportunity to buy once again. You see there is a bearish trend. Yeah, and then somehow they will be going up once again in the future. How about Maxis? Let's see Maxis. Wow, Maxis is also quite drop somehow. Yeah. Okay, quite drop. How about the other companies? Let's say uh, I think was energy. Okay, energy. Let's have a look at Petron. Yeah, this is a Petron. Petron. Okay. Yep. It is consistent. In a phase whereby there is a bearish, and then it will bullish again, and then goes bearish once again. Okay, and then somehow we predict that they will be bearish once again, and they will be bullish in the future. Let's look at 2 years. Yeah, generally for 2 years, yeah, it was more on bearish trend. Okay, so that's in how do you read technical analysis. Yeah. Okay, any questions so far? Any questions so far?
No, sir.
Okay, how
No,
about the others? Okay, all right. There is no question. Let's continue with the next part. Okay, philosophy in technical analysis. Okay, there is a rule of thumb, yeah, to follow, yeah, when we want to analyze technical analysis, which is studying the graph. Okay, the first one, sorry, there are six bases. Let's have a look at each one of them. Okay, the first one, the market has three pattern. What you see here just now, yeah, in the discussion that we have, is more on by looking at the primary trend. That means a general overlook, yeah, general shape. Yeah. Okay. And secondary trend is more on the detail, smaller than the primary. And tertiary is more on very small minor details. So that is three patterns on the market, the technical analysis, yeah. But we are more on seeing primary trend. That will might be enough, yeah, compared to secondary and tertiary. Okay, we're talking about primary trend, yeah, it will affect investors' long-term decision. But for secondary and tertiary is more on short-term decision. Yeah, because yeah, some investor they want a short or quick profit, so that's why they look at secondary and tertiary. But if you are investing for the long term, yeah, I mean for as long as you hold and you will sell later, you will look at the primary trend. Okay, the second one, major trend have four phases. Okay, so it is based on timing. Yeah, it is based on timing, accumulation, public participation, access, and distribution. Let's say this is the day one. This one, let's say day 30. Okay, for day one, accumulation happen because we cannot see the trend. Yeah, because that is a day one, they need to collect the trading volume. Yeah, that means information. They need information first. And then once the accumulation has been done, yeah, that means that one is quite a slow trading. That one is a slow trading because not many people know, not many people involved in this one. So at one time when the investor is when the analyst start to see the trend, most of the public investor will start to make an aggressive trading. So that's why buying, and they bought more shares. That's why the price goes up until the phase of excess. Yeah, excess which is surplus because over trading. Okay, because of over trading, which is overbuying, yeah, the price will be reached until the peak only. And then, yeah, once the price goes up, let's say this one is 1 ringgit, and then this one is 5 ringgit. So most of the investor took the opportunity of selling for 5 ringgit because they can make profit of 4 ringgit. Yeah, 5 to minus 1 is equal to 4. So that's why they're selling the shares. If most of the investors selling the shares, the share price going down, yeah, drop easily, we call it as a distribution. We call it as a distribution of profit. Yeah, what does that means? Yeah, the distribution of profit from selling shares. Yeah, so that's why. Okay, going back to the illustration, this one, the pattern just now. Okay, so and this one, this let's say just assume that Petron set up a new company. Okay, this is more on the accumulation, and then participation, excess, and then going down will be distribution. Yeah, so that is based on the timing. Yeah. Okay, so this is the description of what I'm just saying here. Because of excess due to over aggressive, and then distribution, that means market tends to move into the original phases and so on. Yeah, so that is a description that I have told you earlier. Okay, the third one, the averages must confirm each other. Yeah, like we told you that, yeah, once goes up, will goes down. This is the point. Yeah, meet each other. Yeah, bullish point meet the bearish point. See, Yeah, the trend reversal. That means you're going up, going down, going up, going down, going up, going down, going up, going down. Yeah. Alright, the market discount everything. Market price movement influenced by external factors. Yeah, there is a reason why price going up, going down, going up, going down because of the factors that make that happen. Yeah, economic factor, political factor, social and technology. Economy, we're talking about recession or versus growth. Yeah, okay, the performance of the economic. Okay, this one especially focusing on macroeconomic. Yeah, okay, macroeconomic. If you take macroeconomic, you will learn on the inflation, yeah, unemployment, yeah, monetary policies and so on. Political, we're talking about political turmoil or changing in government. Yeah, social is more on the lifestyle and um, cultural practice, yeah, by the society. And technology, we're talking about technology advancement. Yeah, technology advancement or technology downturn. Yeah, yeah, sophistication and so on. History repeat itself. Yeah, this one is almost similar to this one. The averages must confirm each other, whereby past performance will help technical analysts to picture the trend whether it is bullish or bearish, and they believe to reappear in the future. Okay, so this technical analysis will help you to make use an eye just for analysis only. Okay, it relates to efficient market hypothesis. What does hypothesis? Hypothesis means that you will talking about testing relationship, or hypothesis sometimes we call it as a prediction. How sure are you? Do you want to predict this one? Yeah, going back to this one once again. This one. We're talking about prediction, how strong the prediction will be. Yeah, if the price is increasing, how sure you that the price will be decrease in the future? Or if the indication that bearish market price is decreased, how sure are you to say that the market price will be bullish in the future? So that's why we're talking this as a efficient market hypothesis. Okay, so the theory says that the market price is always a correct one. With market price, investor can decide to buy or sell without doing technical analysis. Sometimes you don't have to do technical analysis. You just you just look at the company only, and then you make a perception. My question: which stock analysis is more effective? Is it EMH, efficient market hypothesis, versus technical analysis? So let's have a look at the three version of EMH. Yeah, this one. We have a weak version, semi-strong version, and strong version. So the differences here, I already bold here. Weak version, technical analysis cannot predict future movement because there is no clue. Because this one happens whereby sometimes the price goes flat. Even though there is a bullish, but not much bullish, or bearish, just not many. Yeah, so that the flat trend will make hypothesis more difficult for investor to predict, whether it will be bullish or bearish in the future. But semi strong, that means half predicted. Yeah, half predicted means that it can be going down up a little bit and then going down a little bit. Yeah, because of the inconsistency there. Yeah, okay, that one might be you can see. Yeah, there is one semi strong version. But for strong version, you can see the trend quite clearly. Okay, going down, going up. Yeah. So that means the trend or the movement you can detect very easily. Yeah, you can detect a future movement. That is a strong version. Okay, I repeat again. Weak version happen where there is a flat trend. Semi-strong, that means a half flat, and then strong is an obvious one. Yeah. Okay, there are tools in technical analysis: bar chart, line chart, point and figures, and Japanese candlestick. Almost similar, but the difference is the shape, yeah, the shape that you use. Okay, this is a bar chart. Yeah, bar chart is more on the bar, palang. Yeah, okay, each bar represent day. Yeah, okay, each bar represent day. Let's have a look at this one to see whether they have bar chart. Oh, they don't have bar chart, line, candlestick, and Wallace still. Okay. I think there is a old one, eh? Okay. So what does the bar says? Each bar represent daily trading shares. Okay, so yeah, you see, there is a bar here. Yeah, day low, day high. This one opening price, this one closing price, this one price at 9 a.m., this one price at 5 p.m. Okay, so this one is more on change, plus minus. If you learn at chapter 2. Okay, line check. This one is a usual one, because you can see the line. In fact, we are comfortable by using line. I presume. Point and figure one. This one is more on the old school one. Yeah, as you can see here, XOXO. X is bullish, O is bearish. This one is an old school one. And the last one, Japanese candlestick. Yeah, they use different between white candlestick and red candlestick. Okay, each candlestick represent daily. Yeah, top is a closing price, bottom is an opening price. Okay, and then red candlestick, top opening, bottom closing. Okay, so you can analyze this one based on candlestick also. This one is a candlestick. Okay. Ah, the as you can see, the green is bullish, not bullish. Say daily bullish. We can say that the change is positive. You see, yeah. On 4th December, open 4.3 and then close at 5.2. That is plus almost 90 cents. Yeah. But for the red one, which is the opening, sorry, it's a negative change. Okay, open 6.3, close is 5.7. So as you can see, if we can say that if the green is more than red, that means the trend will be bullish. Yeah. Okay, I give you another example of, let's say, Uzma. Yeah. Okay. You use 1 year, you use candlestick. Okay, as you can see here, yeah, almost half green, half red. Yeah. So as you can see, there is like semi-strong, semi-strong version. Okay, let's have a look at Dash Lady earlier. Or Casper lah, let's say Casper. Okay, even though there is non-halal, we just see candlestick. Okay, there is a one obvious green which is bullish there. Okay, and then we can, yeah, there is, but this one is a bullish trend. Yeah, but if you are more on the tertiary trend, you can see a lot of quite a red, rather than yellow. Sorry, green. How about Saudi? Yeah, um, most of them are balanced. Okay, and then this one is more on bearish trend. Okay, so that is a candlestick, but in Bursa Malaysia, they use a green, green as a positive change. Yeah, and then, sorry, that means good performance daily, but red is a bad performance on the day. Okay, end of chapter 5. Okay, we are done with chapter 5. Open to questions. Any questions so far? Okay, next time, especially for guys who are here, please have your friend attendance link. Just copy and paste from the chat and put it here. Yeah, please assist your friend. Okay, any question?